Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Ichino. How's everybody doing today? Good morning, good morning, good morning. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Let's see who's here. Good morning, Patrick. Snow-covered Minnesota. We've just got rain in Chicago, and I do not mind that. I do not like snow. But if you like snow, go visit Patrick in Minnesota. Good morning, Rams of Fall. Good morning, Waka Waka. Markets love to burn the shorts and then the longs, and then the shorts, and then the longs. Well, there you go. 30% today, 50. I doubt we'll see 30% up today and 50% down tomorrow of the overall market. But oh boy. Yeah, there's Patrick's. I think it's a good one. Patrick Quick Draw. Patrick Quick Draw. Oh, first one in most of the time. Good morning, Anissa. Good morning, Options 22. Did get your email, Options 22. Good morning, Gary. So, good morning, Stafford, Ted, Connor. Where's Connor? There we go, Connor. Chris. Hey, might give 390. You want 390? I think we're going to hit 390. There you go. Good morning, Royal Palms. Good morning, Sterling. Never say never. Well, you're not going to do 50% downdraft tomorrow in the whole market price because there's halts in place. You're not getting 50% down in one day. So, where do we sit this morning? We got the mortgage stuff come out. I know what's going on right now. We got cash and carries. I know it's Kashikari, but I call him cash and carry. He's talking about stuff going on right now. Must not avoid cutting rates. Tim Ross tweeted out a little bit ago, right before the start of this, that Neo Kashikari says he penciled in another 100 basis points in rate rises this year. Terminal policy rate of 5.4%. This is just scrolling by right now. He does not want inflation. He thinks it's peaked, but he does not want it coming back by cutting rates prematurely. I haven't been setting up for the live stream, so I'll have to see if the market has any reaction to that in the last couple minutes. Redbook came out a little better than previous. Next key number is 9 a.m. Central ISM Manufacturing PMI. Still forecast to be in contraction, but slightly still forecast to be in contraction. Previous was 49. Consensus 48.5. Forecast 49. Previous 49. Anything below 50 is still in contraction. Then we got the JOLTS job openings. I'm going to be paying attention to the subcomponent ISM manufacturing employment, which is also still forecast to be in contraction, and the prices, which is still forecast to be actually lower than previous. FOMC meeting minutes at 1 Central today. And I guess if they put something in there from the last meeting that the market takes, I think it could, if the market's going to take something, they're going to still lean towards dovishly, which could potentially spark a rally, but we will have to see right there. Markets so far, Microsoft got some downgrade this morning off pretty big. Apple bouncing, Google bouncing, oil taking the shorts after the double top triggered. The stuff out of China with Ant Group and favorable to Baba up pretty big. Gonna slam into that $100 mark again, which is some pretty key resistance for it. Sectors, cyclical leading consumer, cyclical and comm services, followed by financial energy. The only thing that was really down this morning, Fed Watch tool. Probably need to do that. We're still in fear mode, by the way, while I'm waiting for the Fed Watch tool to come back up, since it is being talked about right now. We're at 72.3 for the 25 basis point for Feb 1st. All right. We are still in gamma mode, negative gamma mode, with the flip being at 3,900. Would not if there's would not be surprised to see us get between 3,900 and 4,000 on an initial push higher once there's some kind of key, whether something's taken dovishly. Overall, in Europe, the inflation figures came out a little better than expected. You can see here 3,900 is a gamma wall and then a major gamma wall at 4,000. In terms of earnings, again, nothing really. We've talked about it. Tomorrow morning starts the minor stuff. And more significantly, earnings really kick off with the financials on the 13th of January. So here's what I was watching. Pretty key reversal in the dollar. Still an inside day. Remember, did not get above the rotation zone and rotated back down. Reason I'm keeping an eye on this is it's hit the first target on the double. And if this plays out, that could be bullish for equities with a dollar pullback to the most recent low area. And if the dollar breaks this 103 area, I could see equities really taking off to the upside in the short term. But still inside. I am keeping an eye on that double. Let's see who else is here. Good morning, John. Good morning, Amit. Good morning, Rich. Yeah, trading the yen is better than trading stocks. Well, the yen's got a nice pattern with a trend. Good morning, Donald. Let's see. Afternoon, Charles. Mike, when you talked about trading the Japanese yen micro futures yesterday, assume the patterns are the same as the US dollar, but inverted. Correct? Yes. It's the futures are inverted to the spot FX. So you're just going to trade the opposite pattern and use I like the levels come out a little stronger on the spot FX because they trade longer. But you can still do your patterns and just come up with the levels on the futures. CD, good day. Good morning, Sashi. All right. Let's peek in at the market. So I know Sterling had on the double from yesterday afternoon, hitting all the targets. So that's over. That's over. The key area I'm watching, remember, we're still in this major consolidation pattern. Push up, especially if we get below about above 38.77. I'm targeting 38.97 to 3900. And then above there, I key in on roughly about 39.20. Breakdown area is back at 38.31, where it sits right now, unless a nice pattern forms. It's no man's land. Going into the open, though, I will be focusing on about 38.53. That's this little resistance that's been tested multiple times and held as support. So that's my breakdown area going into the open. Keep in mind, if it does push up, the first area of resistance before we get to that 38.97 is about this 38.73 area. Everything still in consolidation. Cycles at the top and trying to roll over on the daily, at the bottom and trying to turn up on the weekly, and we are caught in consolidation. So I can't say it enough. The major plays won't come until we get the breakout or breakdown. Other than that, my overall advice is don't get chopped in this range. The major breakdown area is right around 3,800. The major breakout area is slightly above 3,900. And then really confirmed if you get above 39.35. Those are the key numbers you want to focus on. Everything else would be just short-term trading patterns. NASDAQ. Let's just see what happened with the NASDAQ. See, you do have, even though this is a mess in here, you do have a little breakdown, double top. Let me just double check. Yeah, I hate this in there when it does that. It's more trading as a horizontal pattern. The targets are going to be nearly the same, but the key area is about this 10,978 for breakdown or above 11,045 for breakout. About 11,045. Your next target is 11,072. And it's into a partial clear path. And then I am focused on this 11,180 to the upside. That is my key level to the upside, 11,180. Still within the declining daily rotation zone. Can't get more aggressively bullish until above about 11,340. So, went over to breakdown zone. We start tipping though below about 10,950 will take me into more bearish with a target of about 10,860. And then the major line in the sand is still 10,721. So, let's jump to the spiders and the Qs. The spiders closing 380.82, gapping up 382.55. Key areas for the spiders, bumping this one up just a bit. This one's coming up to the 384.37 first target higher, and then I'm targeting right around 386.50 to 386.60 to the upside. Besides the gap fill, which would take us back to 380.83, the breakdown area is 379.30. 379.30, and then below 379.30, I am targeting roughly about 376.78. Still also in a consolidation pattern. Can't get more bullish on this until we start breaking above 387. So that's where that sits. The Qs. The Qs. Little gap up. So key support coming in on the Qs. Let me clean up this chart a bit. Key support is right about actually key resistance is about 266.50. Key support, I'm just watching the gap fill, and then the major support is 263. The gap fill, should we roll over into the open, 264.46, we're trading 266. So significant overhead resistance, 266.44, 266.50. Above there, I am targeting 268. Just in front of 268, the declining daily rotation zone. And pretty close to the breakdown level. You want a little higher level. The key is, if we get momentum, I go for about 268.56. 268.50 area. We start closing above there, we could be getting a shift in the Qs also. That's where that sits. Let's jump back to the Dow real quick also. Still watching the 33,663 area, especially on a closing basis, triggers the sloppy bullish pattern. The breakdown area is below 33,050 roughly, but needs follow through momentum below there, and especially a close below there would be a retest of the lows from December 20th. Other than that, just sitting in consolidation. The Russell, still breakdown areas roughly about 1760, breakout 1797. Within this range, there's just nothing unless you're trying to trade short term, but even the patterns have been crappy. The DAX rotating up. So I'm watching for, again, I was watching this 14,607. If we break above there, 14.8 is my next key target. The notes rallying off the better inflation data, not even reacting to that. Shrugging off the Neil Kashikari comments, not an even blip on the radar. So, target 113.24, 113.25 is the next key target to the upside. Dollar index, we already talked about. To lead this off, I'm watching for the double to play out. And then if we break below 103, that's going to be very interesting. We'll jump back to the VIX. Crude triggered the double top. You can see triggered 1 hour and 4 hour, coming back down, pausing at the first target. Next two targets 73.50, 72.40. Also, you get the daily close back below 74.36. We could easily carry this back to 71.51. So nothing bullish on crude right now. Watching for a retest this low area. We pointed out that double. That was confirmed and then triggered overnight. Gold still rallying. Finally looks like it's going to close above 850. It's trail mode. I am still watching for a significant topping pattern and then the pullback. The pullback could be an amazing buy setup after a pullback. This would just be coming into major overhead resistance. About 1880 is the next harmonic target. So, copper still stalled out. Coming back to test the 50. So interesting with the plays in not the notes rallying, gold rallying, dollar coming back. Yen still holding, again, your long term. There's nothing in the short term unless we get back in the rotation zone and set up for another rotation. Euro triggered the double. Looks like it might stop it after not hitting the stop reduction, but not stopped out yet. So the euro triggering and then a quick little bounce there. No stop reduction yet. So if you're working off the stops on this side, the stop is 106.76 on a closing basis. Pound still caught in this little range. Nothing there. The only breakout play for me I'm keeping an eye on is above 121 right now, with holding the 50. Bitcoin, nothing going on. Tesla, the insurance registration numbers out of China were absolutely horrible for Tesla this morning. 104.18 is the next support level. We're gapping down, so I will immediately watch for a potential gap fill play, especially with stronger markets. Yes, the double's still in play. We break below that 104 area, though. Target is 100. Will be some, probably be a fair amount of resting orders there. If it does fill the gap, then you do have a clear path move to the upside. So if it shrugs off the bad registration China data because it's still very oversold, you're into a clear path up here. Keep in mind the targets for that would roughly be the breakdown zone 118.82, and then the next target would be for the gap fill back to 123.24 on any bullish play. And then you get the close above 124.47, you trigger a double bottom pattern. Can't keep up with all of Sterling's news updates. So that's where we sit. I know Apple was a gap up today. Just peek in at Apple. Remember, this was not a double bottom. The breakdown is trading above the breakdown pattern. So on a rally, I'm really watching for a return to the daily rotation zone. And roughly 130 is a very key level should Apple take off. Support now will be about 126. Pre-markets 126.20. If we do break below 126, I'd watch for that gap fill back to the closing price of 125.07 yesterday. Microsoft with the gap down, with the downgrade, with the worry about cloud services. The key area you want to focus on with Microsoft is about 232. 232.36 on a closing basis. Because then that could watch for, we could then get the trigger for lower prices in a retest of November's lows. But if that area holds, I'd be focusing on it, be shrugging it off, and then I'd be focusing on a potential gap fill play. The VIX, still sitting here. Nothing going on. If we do get in a bullish mode, I'll be watching for the gap fill play back to December 30th to reinforce the bullish mode. But since options trading's gone so short term right now, it's just not getting a lot of great VIX signal. When using implied volatility and options to find potential moves in stock, once it gets above that level, what do you mean once it gets above that level? Does it amplify the move higher or lower? Once the stock gets above the implied volatility levels or below it? So once the stock exceeds the implied volatility moves, it can amplify the move in that direction, yes. So, just seeing if there's anything else we need to touch on. Not seeing much. Natural gas trying to put in a little short-term bottom, just now back above the harmonic, but on any rally, this is where I use the prior harmonic level of about 440, 439 as key resistance. All right, with that, I'm going to have to run into the open. I have a busy open this morning. I shall talk to everybody after the close. Let's just peek at the futures. At the futures, I'm really going to be focused. If there's strong tick and we get a run up, I am focused on a potential at least short-term breakout play into the open. And hopefully then if you get some key levels, I'm going to be really, if we can overtake this 38.74 area, then I'm really focused on the run back to the 3,900. That's where we sit. Again, gasoline prices here are spiking with oil dropping. Okay. Again, that's going to be on regional stuff too. And also utility or refinery capacity and oil and gas builds and everything else going to go on. So there's not just the oil. Gas is not a one-to-one correlation with oil. You're welcome, Amit. See everyone later today. Bye for now.